Hello, good morning all. If anyone can hear me, kindly type audio in the chat. All right, let's give additional 5 minutes or thereabout for those that might be trying to connect and have some issues currently. So we'll start about 5 minutes, we'll kick off. So just exercise patience till then, just 5 minutes. Thank you all. Hello, please, a word of caution. Let's stop spamming the chat. Someone just dropped a link to a Telegram group that is not from Rally. Please, kindly avoid doing that in future. You know yourself, I don't want to call you out. Please don't drop any link or any contact in this chat. Thank you. Good morning to those of you just joining. We're waiting for you. We have additional 2 minutes or thereabout to kickstart. So understand that's the reason for the silence. So please exercise more patience. In additional 2 minutes, we're going to kickstart. That is to accord or afford those that are trying to connect but might have some challenges, the opportunity to join the class. Well, in response to why don't I expel the person, I'm taking it as that could have been an error. So I'm giving the person benefit of the doubt and the opportunity to redeem him or her image. And I think I like the way some of you are greeting. Maybe we should make that a standard. A couple of persons are dropping the city they are from. So while waiting for this extra 1 or 2 minutes, can we just try and drop the city where we're hearing from this morning? I can see good morning from Akwa Ibom, that's raining word. I can see from Jos, Chris Schumann. So pending the additional 1 or 2 minutes, can we try and drop the city where we're listening from real quick? All right, Olusegun James from Lagos, came from Abuja, Osogbo, Abeokuta, Benin, Ibadan, Warri, PH. The South Southerners are representing. Same as West, Lagos, Benin, Ibadan. Abeokuta, Ile-Ife, Abeokuta. We have quite a number from Abeokuta as well. Abuja, Uyo again, Akwa Ibom, Chris Usoro. Owo, okay. That's from Felix. Matthew from Lagos, Asaba, Delta, Lagos. Abuja, Asaba. All right, everyone, you would agree with me that we exercise enough patience. For those that might be having connection issues at this point in time, let's just kickstart. The beauty of this MMR that we do every morning is the fact that it's streamed live. So even if you miss this particular lecture, this particular webinar, you can always go back to our YouTube channel and watch through. So whatever information you miss, just follow through whatever it is I'm saying subsequently. You can always fall back to the recorded version and then get the same information. So without much ado, let's get into today's activity. My name is Olabisi Olaleru. I'll be the facilitator for today's event. I'm a financial market analyst and regional manager for the Southern region for Rally Trade Rally Academy. Let me share my screen. If you can see a change in the screen share, please kindly type screen. If you realize that the screen has changed, please type screen. All right. Thank you, Mr. Emmanuel. So let's forge ahead. So we're going to see what the trading activity will be like today, being the midweek of the third week of August 2024. And oftentimes, like I always do, we always check the market from two perspectives. The major two that matter, that is the fundamental and the technical analysis. It's always good to check the fundamentals. Let's see what economic, social, political, environmental impact could change the decision in the market in the course of the day. It's not enough for you to have your technical analysis top notch, because even if you've analyzed based on price movement chart patterns, whichever it is you use or your indicators, fundamentals can skew the market at any point in time. So I'll be moving over to Forex Factory to see what our current situation will be for today and maybe the remainder of the week for those of us that are swing traders. So I'm switching over to Forex Factory in a bit. Give me a minute, or rather some seconds. I've switched over to Forex Factory. If you can still see my screen, please type Forex. I need someone to type Forex if you can see my screen. Let me increase the zoom rate so I can have better clarity from your end. All right, Forex from quite a lot of you, so that means you can see my screen. Okay. You'll quite agree with me, for those of you that have been following our analysis and have been trading in the course of the week, that the dollar seemed to be weakened across board, kind of. And that is not far-fetched, considering the fact that anytime you're close to the change of governance during the election period, end of a regime, there's always this sentiment build up. And policies might change any moment from now. So sentiment often rule the market. And the dollar is quite central to activities in the global financial market, being the global reserve currency. So everyone is trying to see or leaning towards what the activity or situation will be with the election in US set for November. You might think that's quite a time from now. It's about 3 months. But do keep in mind that from now to 3 months is such a short time when it comes to policy and situations. Also, at the later end of most dispensation, people are often, that's politicians I mean now, focused on re-election rather than policy implementation much at that time. Because anything that I would have done is already in setup. So now focus is always true or directed towards re-election. Even though Biden has dropped down for Kamala Harris, keep in mind also too that this possibility of the far right pushing a female president. They could not achieve that during Clinton's time, that's Hillary. Trump defeated her. This might seem like that point now. So there's this sentiment hovering within the US right now. Let me show you what activity was like last week for the news released across most of the high impact news for US. Tuesday, you had negative news for the core CPI, which is a measure of what, core PPI rather, a measure of the purchasing power of producers, which is a leading indicator, not a lagging indicator, because whatever it is you are demanding is a function of supply and production. So producers don't increase their demand for raw material production goods if they don't envisage a possible demand for their product. So PPI reduced, core CPI reduced marginally, but on month basis, it was flat. But if you now look at Thursday, when you had the retail sales and unemployment claims, all of this were so good for the US. So you can see that the news is mixed. But the current ones, that's the lagging indicators and the current present indicator that shows consistent present activity are all positive. But leading indicator is showing negative. So that should not normally skew it against the dollar. But because the sentiment towards the electioneering process and the current situation right now weighs heavy in the heart or mind of investors, that is what is truly pulling the market. So for this week, what most investors will be looking at is Friday, when the chairman of the Fed speaks, that's Jerome Powell, by Friday, 3 p.m. That will give a clear-cut path to what they expect would happen and what has happened in time past and why they were able to achieve what they achieved or why they didn't. Because that is when you truly know what they are, apart from writing it, is going to state it and have somewhat Q&A session where they respond to questions to indicate why, what, and what didn't happen or whether the economy is moving in their projected path. So this being said, let's move over to the chart for some technical analysis, looking for possible trades and direction today. So I'm about share my screen again and changing it to the chart. Couple of seconds, please. I've moved over to my chart. If you can see the chart, please, someone should type chart. I've moved over to the MT4 chart, the trading platform. All right, 3 persons, so that means you all can see my chart. All right, from what is displayed here, I'm on the dollar index. That's the DYX or the USD IDX. That's the measurement of the strength of the dollar across a basket of currencies. So let's say the average strength, relative strength of the dollar. You can see that after this surge, since last week, Thursday, price almost at a verified resistance has plunged down steadily creating lower highs and lower lows. Fell sharply and has moved over 173 pips down. So now looking at what other currency pairs will do, let's move on to Euro USD first so that you can see how consistent this has been over that period. Since that same period last week, looking at Euro USD, I've moved to Euro USD now. Since that period, you can see this build up on the Euro USD. And that was also resting because I already have this mark shaded since time past, already hitting on a very, very important support level, and price has been on the upturn. Even though as it is right now, let's try and see the RSI, price might, from what I can see here, be overbought, but it can't just rush in also. Give me a minute, let me launch a new chart and load the RSI. All right, can I see price is overbought as it is and has created a divergence pattern. First off, let me clearly explain something here. The RSI is a leading indicator, part of the oscillator group of indicators that measures the movement of price over a period of time and uses it to calculate what the futuristic tendencies will be so that you can know when price is maxed out, either as overbought or oversold. It has a higher limit of 70% and a lower limit of 30% to show how low or how high price is. But please, the fact that price has gone above the overbought region, that's above the 7% region, is not enough for you to sell. Also, the singular fact that price is in the oversold region, that's below the 30% mark, is not enough reason for you to buy. Here's the reason why. In simple economics, there's a term called demand. We all know that. There's something called change in demand and change in quantity demanded. Change in quantity demanded is a normal activity or a normal response to a normal price activity in the market or of any product or service. But change in demand means a turn, a shift, a paradigm shift from what is obtainable because some other variables apart from price are affecting that particular service or product. Same can be put to trading too. When you have abnormal demands, in times of crisis, in times of war, or just like we have it now, the scarcity of fuel, no matter the price fuel gets to, those that really need it will buy it no matter the price because they know that without that fuel, their car cannot run or their production will halt. Meaning it's not a normal demand situation. So there are times that price will be overbought and you still see that you still go higher. So it's not enough for you to rush in. So that is why anytime you're using the RSI, you must have a supporting principle or indication of another principle to back it up. What that means is this. Anytime you're trading, you cannot rely on just a single indicator. You need at least 2 to 3. And these 2 to 3 must be cut across the 2 different types of indicator approaches. Either the lagging indicators and the leading indicators. Have a leading, have a lagging, or have some other means of verifying or confirming that same situation you've seen. Hence why some people have the trading strategy called the confluence, having 2 different or 3 different indicators agreeing to the same thing. So you know that when 2 or 3 agree on that, it cannot get wrong. So when it comes to using RSI, I use it with a principle called the divergence. Divergence is a shift in what the normal market activity should be. Let me explain that from the chart. Please, looking at what I'm pointing out here, let me take a pause and ask a question first. Somebody just dropped there, no audio. Please, for the rest of you, if you can still hear me, please drop audio. Yemi Ogedengbe, you're stating no audio from your end. Others, please, can you still hear me? Audio. All right, please, Mr. or Mrs. Yemi or Miss, as the case may be, kindly check the connection setting from your end. Everything seems okay from here. All right, now to my main question. How would you rate the speed? Fast, slow, or okay? Please, how would you rate the speed? Fast, slow, or okay? All right, I have most persons on okay, so please, Mr. Debolu, if you think I'm too fast, maybe you're multitasking, try and give some concentration. I'll try and slow it down a little bit, but we have to also consider that time is not too much, so we need to pick as many as we can within this period. All right, so let me now show you what I mean with divergence on the chart. This is a trading principle that hardly fails. So even if this is the only thing you can get from this lecture here today, you have what we call an ironclad trading strategy, especially for those that are swing traders and not scalpers, which is where the real money is being made when it comes to trading. All right, please look at my chart now. Let me zoom in slightly. You will see that on the RSI, price here at the point where I am is higher than this second point, indicating a lower high because the formation is on the higher level. Let me sketch that out using the trend line to achieve the mark point. You can see that the trend line at this lower level here is sloping downwards, meaning the high that has been created here, this second high is lower than it. But when I measure the same thing going to my chart, you realize that this on the chart is a higher high. Using the crosshair, you see that this point here measures up to this high here. This second point here measures up to this other high here. So on the main chart here, or the upper part here, you can see higher high has been built. On the RSI, you can see what? Lower high being built. That means they are moving in different direction. Hence, the name divergence is diverging. It's not going the same direction. That goes to let us know that something is wrong somewhere. And what that now means is price might reverse soon. So how do you now target that reversal and make the best of that movement? There are two approaches to this: the conservative approach and the risk tolerant approach. For those that are conservative, I'm not in a hurry. I need the full confirmation first before I get into this trade. You will measure the lower bound between these 2 points you've picked here. First, second, look at the midpoint here. That is the lowest price I've gone. You now measure where that coincides with on your chart. Looking at my crosshair now, if I trace it up, this is where it is. And that also shows you a very strong support level. So meaning you have to wait for price to break this lower point here on the main chart. That is when you're sure that price has broken beyond the low that now indicates it's not a retracement, but a reversal. From there, you can follow price down. If a true or totally conservative person, in this case here, will wait for price to break it before entering a short trade, or allow price to break it, then set a sell limit above, waiting for a retest, because it's a key area. So if price breaks it, it goes to pick a retest first. And you set a very close stop loss at this closest high to that entry, not this highest point here, but the closest high. But for those of us that are more open or prone or tolerant to risk, you can use the RSI itself for an entry level point. How does that play out? Wait for price to break below this mark here. That's below the 57.7% price level. So if price should break below it, then make sure that as price is breaking below it, the candle that breaks below it, when you look at your chart here, must be a bearish candle. Please, I repeat, once this mark point here, this 57.7% RSI level is broken, you'd have to go and confirm that the candlestick that broke it is a bearish candlestick. Hence, that is a confirmation of sell. Then you can start your short trade, in which case people here will enter this trade before people at this level, thereby covering up some additional profit ahead of the market or of the conservative traders. So that is that on Euro USD. Although for those looking for just scalping trade, we can look for lower time frame to see probable entry points. You can see that price has leveled up at this resistance level here. At price level, let me pick the price level of the resistance that can easily push price down at that upper level there. 1.11312, 1.11312. So you can have a tight stop loss about 5 or 10 pips above, knowing that when price hits that high, we expect it to come back down because price is struggling at that level. And on your H4, that is a verified resistance zone. So you're protected on a trade down, meaning as it is for Euro USD, price is looking for a way to come down. So look for bearish trades and look at these other two principles I've stated to help or guide your direction on trade on Euro USD. Moving over, let's touch GU very fast since we know that's closely related to activities on EU. I've moved over to GU. Yes, my cursor movement can be fast, but as I've said earlier on, I'm trying to cover as much ground as possible in this short period of time that we have. So please do well to go and watch the replay or the recorded session. It's live streamed, and we always post the recorded version so that you can always see that also. Please, pardon me for that. I'm trying to cover as much as possible within this short time span. All right, for GU, the same thing is applicable. You can see that price has been on the upturn, same as EU, and price has hit, you can see here on your H4, that's the double top. It has hit that same height as been before, but let's go lower to see a good entry point. Or funny enough, let's see whether there's a divergence formed here also, as we've seen on EU. All right. Unlike the EU, you can see that here is a difference from what we saw on EU for GU. The RSI is showing lower high. Can you see slanted downwards? It is treated as high because we're on the higher level bound of the RSI. So this here is a lower high. And on your chart also, you have a lower high as indicated by this shadow here. The wick was higher at the first level here and lower on the next level. So this here is not a divergence. Even though price is looking for a way to come down, but not on the principle of divergence. So same as EU, for GU, look for possible downturn in the movement of price. Price is covering up what it did previously, and we're expecting not to go beyond this close high here. Let me zoom in closely. This closest high here is an indication of price rejection. After this first here, all of this indication of price rejection. So on GU, same as EU, look for what? Entry point, because price is on the downturn as it is. Price has gone too high. Price look for a reason to what? To come down. On the lesser time frame, this is what you can look at to aid your entry. Either you target price, I'm on 15 minutes time frame now, so you can do same at yours whenever you're trying to get into this trade. When price gets to this closest high here, 1.30364, around that level, price should be rejected. So look for a very short stop loss level to protect yourself on that trade while looking for price on the downturn, or wait for price to break this support level here. And the lower bound or the lower mark of the support level, as I have it on my own chart here, is 1.30097. If price can break lower below that level, then you know we're going down or the downturn for GU. Let's check USD CAD real quick. USD CAD has also been on the downturn. For those of you that started with us from the beginning, we've said it, sentiment is against the dollar as it is. So the dollar is weak, majorly sentimentally. That's the gospel truth. And you can see that price has come down generally. On USD CAD, price has been trading in a range, in a channel, as I have outlined here before. Let me remove this support level indicator. And you can see The price broke it, made a retest at a technical resistance, and has gradually gone down. It's at a verified resistance and support here. So price is in a range at the point to we have it now. Let's look at 15 minutes time frame and see. As you can see here, verified resistance above, and here's the support that has not gotten to again. So if I'll use the same concept at the higher level and draw another channel, that price seems to be also. Let me readjust this. If you can replicate this on your own chart, it means that the support level that really matters, by which point you can be sure that price might still go lower for USD CAD, starts from the point of 1.36070. But for a smart person like me, and that is conservative on such a trade like this, especially when trade is ranging, you have to watch and see price go below this closest low here, which is at 1.36016. 1.36016. As if price can break below that, then price is still on the downturn. And don't plunge into a long trade on USD CAD yet until it breaks this closest verified resistance here. And the price level for that verified resistance is at 1.36242. At 1.36242, that is the upper bound of verified resistance on USD CAD. So wait for price to break that before you can think of what? Launching for a long trade there. At that point, price retracing, following through this verified resistance on support, your closest take profit is this other verified resistance at the top here at price level 1.36371. 1.36371. There's a verified resistance at that level where you can wait for a take profit. Or if price breaks that again, then you know correction has started. For those of you that are conversant with the Fibonacci retracement or expansion pattern, you can sketch it at that level. Going to AUD USD, price has hit a verified resistance. Look at it right here. So price is looking for a way to go down because all of these movements are just sentimental based. And if price has rallied or moved in direction of any trade, people would have seen profits. The way people are taking profit out of the trade, market will gradually go in the other direction. Always keep in mind that anytime you're trading, always second guess yourself when the facts change. What do I mean by that? Price activity is a function of actions of people placing trades, irrespective of theories or policies supporting such. Imagine if there's crisis and people are not in a panic mode and they're not running helter-skelter. It will be dumb of anyone to start panicking because what it means is, yes, it might be a crisis situation, but people are managing or handling it properly. And even if there's no crisis or dangerous situation, but people are panicking, that means there should be something propelling that thought or that action activity. So what I mean by that is this. Even if you've analyzed your market, say as we're doing right now, then in the course of the day, you see a drastic movement. You need to take cognizance of the fact that the facts to which we reviewed the market at this point could have changed. So you need to consider facts as at the moment on the spot if all of these changes or part of those facts change, because when they do, situation changes from what it was the previous time, because price is a live feed situation. As it's happening, it's taking cognizance of that and is replicating it right on the spot. So price now on the ADUS, as you can see shadows all about, and you can see Doge and rest. Here is a dragonfly. Some of the patterns we're seeing here, see this here on H1, please, for those of you can see my cursor here, is a bearish engulfing candle to this bullish candle that hits the verified resistance. All of these are indication. Here's an inverted hammer here, even in bearish formation at the upper level. So these are three different formations indicating a possible reversal on GU, a bearish reversal to be precise, meaning on AUD rather, as we've had on GU, EU, all of which you have the dollar as the quote currency, price is looking for a reason to go down. So this is not the time to be looking for long trades on AUD USD, EU or GU. In the case of AUD USD, let me pick out a price level that the closest low here doubles as a support level, which is at price level 0.67328. So for conservative persons, you're waiting for price to break below that level. Or a retest at the verified resistance above, which is at price level 0.67493. All of these are places where you can target entry level for your short trades. But for those of you that have high risk tolerance, you can go for your instant execution, but please do remember to protect yourself in any trade using your stop loss and you take profit to peak profit at the reasonable point. So that's AUD USD for us. Let's move over to USD CHF. I'm on USD CHF now. So as to be sure that we're still in line or in sync, someone should please type USD CHF or just CHF. I'm on USD CHF now. I'm on USD CHF. We'll take questions. Let me finish up the analysis first. We'll still take questions, please. I'm on USD CHF. Can anyone please? Thank you. Epemski. That means we're on USD CHF. You're all following me. All right. So with USD CHF, price is on the downturn. And as you can see, everything still following the same pattern. After that abnormal candle on the 15th, that's last week Thursday, price has gradually been on the downturn. So let's look for possible direction. See, USD CHF price will still go up to just like the others. You can see that price broke a turncoat resistance and is finding its way to the next support level, which was the support level, which price was pushed as of 5th of August, but that's quite a long way back. So let's go to the lesser time frame to see good entry level. All right, on your 15 minutes, price already hit a verified support, creating a back-to-back, almost a double bottom here. You can see back-to-back, and price has risen up also. Price is at the turncoat resistance. So for USD CHF, don't rush into any trade now. Like the previous ones, price is also looking for a reason to go up here. So wait for this turncoat resistance to be broken first before you can take a trading decision. And the higher bound of that turncoat resistance, which will become a support if and when price breaks it, is 0.85578. That's the upper bound. So allow that to be broken first. On the lower side, where we have the verified support currently, so if pressure pushes price down, you're more confident that this verified support at price level 0.855429, 0.85, sorry, please, 0.85249 is going to hold price up. So with those, you can look for the opportunity for price on the upside. Let's touch on USD JPY. Let's see gold. So I'm on USD JPY first. I've moved over to USD JPY. Same as others. USD JPY came down. Price is looking for a reason or a way to go up. So looking at the lesser time frame also, price is hanging in a balance on the USD JPY. So you have to wait for price to break above, because it has broken some supports yesterday till this morning, but they are not indicating as resistance yet until price goes to test them and if they hold price down. So as it is for USD JPY, price is hanging in a limbo. The closest entry point that you may be targeting is above here. So on your own charts too, you can shade it out. This is the closest resistance to price. It's struggling at a price rejection level here. And that price rejection level ends at 146.045. So if price can break that, push from there and look for every of the closest high on your way up as your first, take profit, second, take profit. Before, for those of us that are swing traders, you allow additional price going up in that direction. I've moved over to gold. Just to be sure that we're still together. I need someone to type gold, please. Gold. All right, thank you, Akintude Oluwashina. We've moved over to gold. All right. We're still in sync. I'm zooming in slightly. I don't want to repeat this over time so I don't become or sound like a broken record. We've said it before. Dollar is weak, so you can know the reason why all of these movements are one way, all against dollar. Gold also, let me check the other time frame to see the high because it's made a recent high. On the daily time frame, this is the highest in recent time that gold has hit. Even on the weekly time frame, you can see there's no wick in sight. That shows you how far high gold has gone within this period. And that can only mean one thing. Gold also is in a limbo right now. Any small thing can trigger it downward. It's already going down, but plunging into a trade right now doesn't seem the right approach because it's close to a verified support, which can hold price up. So let's look at the lesser time frame to see how far from that price it can be and how well you can still make a trade here. All right, 15 minutes, nothing reasonable to work with. So let's just stick to our H1 and show price levels. So anyone targeting any trade on gold now should wait for this verified support to be broken. And the lower bound of that verified support is 2496.18. 2496.18. Let me reiterate this for those of us that have heard it before. For those of you that have not, yes, please hold on to this fact. Resistance and support, research has shown over the years, are not precise exclusive points. Rather, they are zones or range. Same way, if you're trying to buy a product in market, you will realize that except if you're going to a departmental store, but even if you move from one departmental store to another, prices can never be exactly the same. There are these marginal differences, either 2, 5, 10 naira, 15 naira, 20 naira. So it shows that price is always within a range. Hence, the same thing too on our market. So your support and resistance zone is a zone or region of price differences that all act as a barrier to price moving freely beyond or below that particular region. Hence, why you realize, as I've been calling support or resistance, I keep saying the lower bound, the upper bound, is because the software I have shades out that region for me so I can know which part of this region am I focusing on. So for the gold, as stated earlier, wait for price to break below 2496.35. Then you are sure that the verified support in question has been broken. If I pick that point out and I go to the lesser time frame, you will see how close it is to the current price. And you can see that price was held there too. I'm waiting for price to go below it. Hence, that is when you can think of price on a downturn on gold. I think I've touched the major traded instruments according to our clients and based on major demand. But let's now see if there are questions based on what we've raised or discussed here today. So please, I'll be going through the chat to pick questions. Any question you have right now is the time to drop it. Questions, please. So I can wrap up with the next 15 minutes with questions. All right, Mr. Olusegun James, you're on the wheels. You want to know what the entry point for USD sell is? Please, I said it earlier on. You can rewatch this on our YouTube channel. The link will be dropped for you, or you can reach out to your account manager if you have too many chats here and you cannot trace out the link. Please reach out to your account manager. They'll drop the link for you. So I can always go and watch it back and pick some of the information you need, depending on the peculiarity of your own question. All right, US 100. D40, gold. We just reviewed gold. Akpan Peter, we just reviewed gold. Please go and watch the replay All right, somebody wants me to re-explain the RSI divergence entry principle. Okay. All right, that's two persons asking about the RSI indicator. All right, let me run through the RSI indicator real fast. The RSI is a leading indicator that is used to judge when price is beyond bound. That means when price has gone too high or gone too low. When price is too high, it is stated as overbought. When price is too low, it is stated as oversold. For every, by trade, and I don't mean trade on the global financial market, even our normal market, normal businesswoman buying and selling, they know a price that a product will get to that they are not willing to stock their shop with extra quantity of that product, because they know that there will be a difficulty in selling that particular product at the current market price. Hence, they won't buy more of it. Or they are sure that individuals that will be requesting for that product may not want to part with such a high money for that product, so they will bother not restock. The same thing with trading also. You have bought an instrument, a stock or a share, or you're trading derivative, or that's indices, I mean, or you're trading on commodities, the futures market, or just normal currencies. There's a price, the price of that particular instrument gets to that is not sustainable. So when price goes too high, you know it will fall. When price goes too low, you know it will rise. Well, how can you now tell? The RSI has a default setting of 70% as the upper bound, 30% as the lower bound. Just go to your inserts, go to indicators, look for your oscillators and look for RSI, it is there. When you now install the RSI, go with the default settings. If you are using RSI alone to judge overbought and oversold region or points, what I'll advise for you to do is increase or expand the spacing. That means change that 70% to 80%, change it 30% to 20% to accommodate for what? Excesses. Because at times, price doesn't go as should because it is not the typical or normal demand. Case in instance, there is a scarcity building now that if you go to major official PMS or petrol outlet in Nigeria, you can hardly get fuel to buy. Meaning you are forced to go to the lesser filling stations and you'll be willing to pay whatever price they give. Since you know that you need to put your car on the road, you would end up buying it like that. Like I bought 900 this morning because I can't have that time to follow that key. If not, I won't be here this morning in this particular training. So you understand now that even though it's not what I would prefer to buy, but I had no choice since I know I needed it for a purpose. So all of this has a way of moving. So price can be 900 and people will still keep buying because where they are meant to see it for the official rate of 591, they cannot get it. So in that case, it is no longer a normal demand. That's an abnormal demand. And this happens in any product or service you can think of. The more suppliers you have, you realize that supply will outstrong demand. Hence, price falls. The lesser suppliers you have, or the more client and demand you have, supply now seems lower than demand. And in that case, price keeps going up. Except the demand stops or the supply increases. So this here is the dynamics. So now coming back to using it to trade, if you are targeting just overbought and oversold, and you're looking for just retracement, slight movement, and make some, target support and resistance level on your chart that can now be the reconfirmation of the overbought and oversold point at your 80 and your 20%. That is one concept of using it. Another idea to using RSI is something called divergence. This is for swing traders, people that want to keep trade for a reasonable period. I'm not rushing. I'm not looking for 50, 20 pips. I want at least beyond 50, 60, 80, 100. You're following the momentum of price in the market. knowing that as price is going in your favor, over time you make way more, which is true. And in this case, you can trade lesser, look for what? Longer term movement, and then make more. Let me switch over to the chart where I explain that, or use the AUD. I think AUD also has a divergence formation. Hold on, let me see. So I can use that to explain this. Just a minute. I'm trying to load the AUD chart. All right. The AUD chart even has a better formation on it. Please, if you can see my chart here, kindly help me type AUD because this technique I'm showing you here is a very dependable one. All right, AUD we are together. All right. Look at, again, on the lower level here, I have drawn a line. You need to use a trend line in this case so that it can show the direction, because trend line is drawn diagonally. Then you draw the same over that same point. Use your crosshair to measure. Look at the first point here. Look at where it is here. Look at the second point here. Look at where it is here. So looking at the chart, you can see it's higher, right? But looking at the other side, it is what? Lower high, because the second high is lower than the first high. In short, let me put a text there. Okay, just for confirmation's sake, hello, people are complaining about audio. Audio, please. If you can still hear me, I need someone to type audio. Audio. All right. No, the audio was not bad before, so that confirms it. I was trying to type the text so that I can get the marks to the points and understand this. Once you can get this as a swing trader, this is enough for you to rely on and make good money from the market. All right. Now, for those of you that are following up, can you see the text first, second that I've written across board on the main chart and the lower chart? If you can see those texts, first, second, please. Someone should type first, someone should type second. So I can use that as basis of explanation or basis for the explanation. All right. Okay. You can see that first and second, I'll move to the explanation. Please follow me on this. You can see that the first and second on the RSI is going low. Look at, it's going low. But first and second on the main chart is going high. So that proves this line here that this is higher high. But this here is what? Lower high. That means they are going in different directions. So now you need to do two things. First people, conservative people. For people that don't want to be in a hurry to place trade, the conservatives, here they are, conservatives. That means their risk tolerance is low, so they see danger a lot. They will use the main chart to trade. Those that have a higher risk tolerance, let's label them risk takers. Let's put that as green. They see the green light easily. They are ready to move almost immediately. This green is not dark enough. All right. Risk takers will use the RSI to pick their entry point. So now follow this closely. For the conservatives, they will look for the lower point in between first and second here. And here's the lowest here. Look at it here, over here. They will now trace it to where it coincides on the chart. Picking it here, you can see the point here. And on the chart, look at the level here. Let me draw a line to pick out the point. That is where price is currently. Please account for the shadow, the wick also. You see that this here is the lowest point in this area here, as outlined by the RSI point we picked here. So once price breaks below this lower point, by must, I'm saying it authoritatively, it is a bearish candle that will break it, which is what is happening right now. And it is that trigger point, we call that point trigger point. It is that trigger point that is holding price now. So long as this sell candle stick breaks below here, you can start your trade on the downside. Or for people that are now overly conservative, they wait for price to come and retest that price level there. Now, for those that have risk tolerance, that's risk takers, they don't wait for the chart. They still use the RSI. Don't forget, RSI is what? A leading indicator. So now they will now pick the lowest point here, which is still the same level. It's the same level, just that both of them are picking from different points. And that level here is at 62%. And make sure you take your crosshair to measure to pick the exact point that where price breaks below that RSI. Since it is a bearish divergence, that means divergence at the top, we're expecting price to come down. Go and check it. Once it is a bearish candlestick that breaks it at that point, they start their sell. You can start your sell immediately. And looking at this here, trace it up. Can you see the color of the candlestick that broke it? Please, for those of you following, let me move the crosshair again. Can you see? I'm moving the crosshair. That's where it is. Can you see the color of the candlestick that broke it? Just as a confirmation. What color is that, please? What color is that? Red. Thank you. Red. Which is a bearish candle. Can you see? It's a must. It's a rule. So the moment you see that red candlestick that has broken it, you can start your sell trade. And your protection there is to set your stop loss above the recent high. Let me put a line there. Can you see? This is your stop loss. Let me edit it to display as such. Stop loss, red line, dash lines. Can you see now that that's your stop loss? What it means is that this person, the risk taker, would have started his trade since here, because this was the sell that broke it. The person that started from here, and that is stop loss of 10 pips. You can see very tight. 10 pips. But right now, the person has made 10 pips already in profit. Price went slightly behind, drawdown of 7 pips, but did not get to that stop loss and is on his way back down. So you can see it's a very tight stop loss also. So this particular trading principle gives you the 3 major important information when it comes to placing a trade. Direction of trade, so that you can know whether you're buying or selling. Your entry point, precise level. Your exit, meaning your take profit, and your stop loss. Here's the stop loss level. And for your take profit, it is anytime the RSI hits the lower bound. In this case, since we are doing bearish, that is your take profit point. Get out of that trade. It has fully done its total movement. All right. I think that explains this. For those of you that still have some other questions, apologies that might not be able to handle those ones at this point in time, because time is fast spent. It's already past 9, and this is the time scheduled for this event. I just felt the need to work with those that wanted to know how this principle, this trading strategy works. For the divergence, you're better on H1. H4 might be too much for you, but please stick to H1. Why? It's a swing trading strategy, not for scalpers. Some people that have the knowledge might be able to scalp a little with it, but the setup is for swing traders. And anytime you see this, so anytime you see price just shoot up in one direction, you see your RSI showing overbought, oversold, look or follow this principle. You can fall back to this particular recording and pick all of these highlights. It is 80 to 90% definite that you would make a good trade if you follow this principle. And it also protects you by setting a stop loss. All right. Thank you for being around here today. I remain Olabisi Olaleru. I'll see you some other time when it comes to this MMR. Make it a point of duty to join us tomorrow also. It's a daily activity, Monday straight to Friday, every trading day. Thank you for being around. If I've not been able to answer your question today, do well to reach out to your account managers, or I'll drop my number here so that you can reach out to me later on if you have some other personal questions. If I can't pick your call immediately, please do well to drop me a message. I might have some other activities going on. I'm on WhatsApp with the same number. I'll respond to you in due course. Thank you for joining us today. We'll see you. Have a peaceful trading day. God bless. Bye.